This is the Stock Trading Reality Podcast, episode 129.
You know, the frustration creeps in, and you break rules. Yeah, well, what happens when you break rules? You got to suffer the consequences. So,
this is the Stock Trading Reality Podcast, where you get to see the realistic side of a trader's journey. Get inspired and stay motivated by everyday normal people who are currently on their journey to trading success. He wants to visit Germany someday. Play trader.
Dankeschön. Guten Tag. That's all the German I know, but I would like to get over to Germany someday. And this is like the fourth take that I've had to do of this, so I don't know. I'm like flustering myself at the thought of visiting Germany. So I don't know what it is, other than both sets of my grandparents are Germany, or are from, see what I mean about flustered? Are from Germany. Now, I don't know the exact bloodlines and when people came over, to America or whatever. But I do have history there in terms of Germany, so I would like to visit someday. Apparently more than I'm aware of, because subconsciously, like I said, this is the fourth take, and then I'm already stumbling onto my words. So maybe I should get over there sooner than later, because maybe it's not good for my health. But yeah, I'd like to get over to Deutschland at some point. Ches, do you have any, by the way, Ches is our esteemed co-host, but Ches, do you have any sort of dream vacations anywhere? Which is a question we ask our guests every once in a while, is a place I'd like to visit. So I guess I'm now asking you that. Any sort of dream holiday or dream vacations?
Not sure about vacations, but yeah, my dad is actually from Germany. They left there, and he came here when he was a small child. But yeah, both my grandparents are from there. My grandma's from Lithuania, and I actually took 2 years of German, but I'm not even going to embarrass myself by butchering it with a bunch of sentences like, hey, can I borrow your bicycle or something like that? Because, that's a pretty odd thing to ask people nowadays. Most people won't just lend you a bicycle if you say it in German. Might probably run away from you or call the police. But I would actually love to go pretty much anywhere in Europe. My parents have kind of done trips now that they're retired into France and Italy and Germany, Switzerland, stuff like that. And they always tell me how beautiful it is and show me all these photos. And I've never been to Europe. The farthest I've ever gone is Vancouver, Canada, is in terms of kind of distance. I don't really count Hawaii because that's still the United States. But yeah, I'd love to go pretty much anywhere in Europe, and I also would like to do a big motorcycle trip in Australia at some point. So those are the two main things. The Europe one is very broad. The Australia one is much more specific.
I did not know that. So your dad came over to the country as a kid. Your dad,
literally on a boat. Yep.
Wow. All right. So that's interesting. So it's your generations aren't too far out then, as far as
yep.
Yeah. So what is that? That makes you like a second generation or third generation. What generation immigrant are you then? Second or third?
I think that makes me the second. My dad is the first, so that would make me a second.
Or would your dad's parents be the first?
Yeah, actually, that's a good point. I have no idea how this stuff
Any immigration
works.
Specialists out there, please, in the comments section, help Ches and I figure out this conundrum.
We can't figure it out.
Yeah, because we're not smart enough to figure this out. So, but anyways, that's cool. See, that's why I like these fun facts, because I did not aware that Ches was such a recent immigrant to the United States. So today we have a great podcast. We are bringing back Dimliwitti. I think I got his name right. That's what he goes by in the room. To be honest, what is his first name? Do you know his first name? Shawn. Shawn is his first name.
Shawn's his first name, but we all just call him Dim.
Dim, yeah. So his screen name is Dimliwitti in the community, but I can barely ever pronounce the thing. So we just all call him Dim, to the point where I had to take a second. I had to really think, wait, what's this guy's even first name? But Dim is what he goes by, and that's what we refer to him as. But his name is Shawn, and he's been a member for a long time. He's already been on a podcast before, so this is his one where he comes back. And yeah, it turned out to be awesome, as we figured it would. And towards the end, I said, hey, Dim, do you have anything else you want to talk about? And then he was just kind of laid on some great talking points that extended the interview that much more, but really good stuff. And at one point he's like, Clay, he didn't quite say it like this, but he's like, I disagree with you about something. And then he just shoved it in my face in a nice way, of course. But then we had a great discussion about it, and it was very refreshing. So make sure you definitely stick around to the end. So without further ado, let's hear from Dim. Dim, welcome back to the podcast.
Thank you.
Now,
good to be back.
I actually did my homework beforehand, and last time you were on was episode 59. So it's been well over a year since you've been back on the show, and you are still in the markets. You are still surviving. So right off the get-go, congratulations for that, because as both Ches and I know, and as you know, that a year may not seem like a super, super long amount of time, but when you're trying to keep your head above water and not only prosper in the markets, that's actually a good accomplishment. Would you agree with that, Ches? I mean, a lot of people struggle to make it 6 months, let alone a year.
Yeah, once you kind of get over the 6-month mark or the year mark, for the most part, you either got really deep pockets and are just continually losing, or more often than not, you've kind of figured out risk management and how to get your piece of the market. That's
true, Ches. I didn't think about that. You could be super, super deep pockets, and you could really be losing for the next 20 years and still be in the game. So I guess good point on your part. But Dim, I guess like what we start to do, or like to do with these, kind of welcome back type interviews is, why don't you give the listeners a nutshell version of episode 59? So kind of what we talked about there in terms of your story, what got you interested, what got you trading, but, just summarized in several sentences.
Geez, it would be a sign of my age if I told you I can't remember.
You don't remember how you got started?
No, I remember how I got started. Going back to that episode, I had explained that a lot of my funding or my capital, we had had an unfortunate situation in the family where an inheritance was involved, but also I had been a long-term investor prior to that, since some of my first careers where they first introduced you to the 401ks and mutual funds and all that, and that tweaked an interest in just knowing about the underlying stocks and the stock market itself. But I was given an unfair advantage with capital to break into trading. And I say unfair because a lot of people just start from basically nothing, or $250 and work up. And I had inherited a very large portfolio to begin with. So having learned from my wife's grandfather on investing side of it and fundamentals, really strong background in that area, we cleaned up the portfolio and spun it out to a separate brokerage account to trade from, so it wasn't affecting our savings, if you will, and just started rocketing from there. Had some huge losses, and as most people do before they enter some formal education process, but after I came to you guys, things really turned around, and I had some major wins that far outweighed the losses previously, and I've been doing well since. Clay, I know I disclosed to you my account size and everything at one point with the just the pure trading account, and since then I hit a high mark, and we've peeled off basically a zero out of that. So I'm down to a small size brokerage account. But the reason for doing that was so that I secured that money, but it's also part of my vacation home endeavors.
Nice. I like how you said you peeled it off to. How did you say that? You took it off to what?
To secure my profits.
There you go. To secure your profits, and that's actually a super good point. And I have a video out on this because, and I got to remind myself this: just because you buy and then you realize the gain, so you sell, that really doesn't technically mean that you've made that money, because sure, it's sitting in your account and yeah, you've locked in the profits. I mean, it's no longer an unrealized gain, it's a realized gain, but there's kind of an asterisk by it, because unless you do what Dim does and you literally pull it out of your account, there's still potential for you to lose that money in another trade, or if you just all of a sudden have a brain fart and you just do something really stupid, that money could still be lost. But if it's not in your account anymore, then you literally can't use it. So when you're out there trading or investing, just remember that there's unrealized gains, there's realized gains, And then there's, I don't know what we need to come up with a term for gains that are booked
gains.
Yeah, booked gain. Is that the proper terminology, or did you just make that up?
I think I'm just pulling it out of my rear end, but at the same time,
No, I like it. It makes sense. And then you have booked gains, which means you can't lose that money at all because it's not even in your account. So just one of those little kind of small things out there that I'm still guilty of. I need to remind myself, of every now and then is, oh, Clay, I'm up this amount. I'm like, well, not really, because I could still do something stupid and lose it all. But I want to circle back real quick. And first off, I applaud you for your humble nature that, maybe you did inherit some money and you started off with bigger accounts, but, and I know Ches, I'm going to toss the ball over to his court here, but just because he got a bunch of, he started with more money, I mean, that's an advantage, but I know you've talked to plenty of people, I've talked to plenty of people where they get a bunch of money and they are just being total morons with it, and you can tell they're going to go right down with the ship. I mean, so Dim's got to give himself some credit, right?
Yeah, absolutely. If you come into $100,000 or whatever it might be, most people will foolishly think, okay, cool, put that whole thing in the trading account. I'm trading $10,000 positions, while the smart person would literally take $1,000, trade extremely small, and see, are they making money, whether it's large or small, or are they losing money? Because if you lose the $1,000, guess what? You'd still have the 99 to go, maybe I need to do something different. But yeah, most people, when they come into kind of a sum of money, they think this is the road to riches. It takes money to make money. But if you're a consistent loser, you can go through that pretty quickly, as we've seen. Yeah,
so, I mean, good on you for being humble, like I said, but also good on you for actually being smart with the large amount of money that you inherited. So the one thing I remember about Dim is, we kind of coined it the fourth dimension, the fourth indicator that he uses, which was fundamental analysis as kind of an overarching blanket, if you will, on top of the charts and the technical analysis that he did. So I guess the first kind of, just let's catch up on things. Are you still using that fourth dimension indicator in your trading, Dim, or is it still functioning the same? Has it changed at all? So let's talk about, where fundamentals still fit into your overall trade plans.
They absolutely do factor in. But they're more technical in that I'm using fundamental numbers and ratings and different things that actually equate to a chart. Over time, you can do it. If you're talking long term, you can do it, monthly, yearly, every 5 years, every 10. You can build up in increments of time, so you can build a graph long enough to feel at ease, or you can do short. And what I have with my particular platform is they give you a number, whether it's in the negative or the positive trend, and in that context, I'm able to look at that metrics little screen and say, oh, well, okay, if I'm going against this trend, it's kind of, I better be tight with my stop losses, but I use it very much as a chart indicator for my my decisions.
And I think it's really cool because honestly, Clay, I'm not sure Dim was pretty much the pioneer for us, or at least our introduction to kind of that fourth dimension of trading. Am I wrong in thinking that? I really don't feel like, there's other people who have a firm investment background, but in terms of kind of trading, day trading, swing trading, Dim kind of is the guy who was the first person to even bring that to our attention.
Yeah, from what I remember, because we've always, I don't want to say anti-fundamental analysis, but it's like, well, you almost gotta be one or another, but I will say that Dim had, Ches and I both going, okay, yeah, I'll buy that premise. I'll go long, Dim's strategy because it makes sense the way he fits it in. So now this thing you're using for the trends, is that something that, did you say your broker's giving you this number, or where are these technical data points coming from, Dim?
No, they come from my brokerage.
Okay, and your brokerage is?
Schwab.
You're still using Schwab?
Yeah.
Okay,
yeah,
so
actually,
why Schwab? What are your commissions first off?
Well, since all the late, it being 2017, we're in almost August now. Recently, or the earlier part of this year, a bunch of different brokerages really put the competitive,
the broker wars. Yeah, the brokers have broken. Yeah, the brokers have broken out in war, which is what Dim's referring to. Absolutely.
Right. So luckily that benefited anybody in Schwab, especially the larger account holders, and they they've basically done away with all my fees except for per trade, which is down to $4.95 per trade, and that's in and out, not transaction. So that was wonderful change compared to the $8.95 per transaction where I started with them a long time ago. But before now and back then, I've tried a couple brokerages. I was with Interactive Brokers, which Hooch is big on. I still have, I want to say about 25K in that account and some long-term positions just to keep it there. I like some of their little tools that they have over there, especially some of the newscast stuff. But Schwab has huge, deep pockets and resources, and any data. That's the other thing. All data is free with them. Beyond the certain, I guess, account sizes, but I haven't found a single broker out there that offers something that Schwab's trading platform does not. So it's just what I'm most comfortable with, and with that fundamental piece, they're huge on that. They offer all kinds of ways to relay the information to you on the fundamental, and it's integral now in my strategy. So I'm back with them where I was doing my day trades at one point with IB.
Gotcha. And honestly, you bring up a good point in terms of kind of comfort, and we talk about this a lot. Don't get me wrong, we don't think you should be paying 3 or 4 times the market rate for, say, a specific platform or something like that. But honestly, when you're comfortable with the platform, it has the tools that you enjoy using, and say the rate is in line with market, and considering you have a larger account, they're definitely willing to play ball and make the rates probably extremely competitive. That's what it really comes down to, because it costs you a drastic amount of money, and I wish there was a figure to kind of calculate how much money is actually lost due to errors in your order entry, exits, misplaced stop losses, things like that. It can add up very quickly. So when you have this comfort level with whatever platform it may be, those errors are drastically reduced, which is really just makes for a more efficient business. But to kind of go past your previous podcast, I guess, how has your trading been since? Clay, what's it been? Almost 100 weeks since then,
yeah.
80 weeks since then. So it's definitely been over a year. So how has your trading been since we last spoke?
But before you answer that, I want to be rude. So did you say that your fees right now are $4.95 both ways?
What do you mean by both ways? It's in and out.
Like when you buy and sell, the total cost is $4.95. Right,
and they do something. So if I do the terminology is a little different with their setup, but I do brackets in there and multi-bracket. So if I buy 1,000 shares and I have I can do several stop losses in that. So I could do 500 at one, 250 on another, and 250 on another. And if each of those stop losses are hit, it divides the exit 495 across them as proportionate to the number of the the percentage of the 1,000 shares. So it's literally 495 for in and out.
That's so. I'm not a math genius, but that's about 250 to buy and then 250 to sell overall. Right. Which that is very respectable. And that's I'm assuming, definitely. And that doesn't matter if you're adding or removing liquidity, I would assume.
Right.
Okay, so that's whereas for me at Lightspeed, I'm technically cheaper than that, and I haven't run the numbers. But if I start just removing liquidity and stuff like that, then my fees can switch to the opposite pretty quickly. So. But yeah, Dim can, and if you're not sure what I mean by adding and removing liquidity, we'll put a link in the show notes about, I've done an article on that, so we'll put that down below, where in some cases you may not even have to pay commissions, but point here being, I will stand corrected. I would say, Dim, that is a very, very attractive fee structure, especially the way they like you said, they divide it up and just kind of spread it across your various orders and bracket orders. And point being, like you said, they have deep pockets. They give you a bunch of tools, and when you're doing bracket orders within bracket orders, that's good stuff. And not all broker. Robinhood is not going to allow you to be doing bracket orders within bracket orders. I'll just leave it at that. So sure, Robinhood is free, but going back to Chez's point too, they're not exactly designed for the type of trading that Dim's doing, and I can see all sorts of order misses and mishaps that cost you a lot more than what the actual cost of Robinhood is. So that's good stuff. Now, you don't have to tell us the exact account size, but do you have like a massive account? Because it sounds like a lot of this is because you do have a bigger account size. So what I'm trying to get at here is for the listener out there that's maybe got $1,500, $2,500. Do they have a chance at this fee structure, or what are the minimums that would be required?
They wouldn't. They would not. They would not qualify for some of the fee waived stuff. A lot of the data. Some of it, yes. I
think it sounds like just call Schwab, right? It sounds like these people should just call Schwab.
Yeah.
Talk with the representative what their numbers are. Because to be fair to Schwab, by the time this airs, maybe another broker war has broken out, and all of a sudden Dim's paying 50 cents. You never know in the world of brokers, and that's the great thing about the free market is literally by the time this airs, things could be totally different. So it sounds like Schwab should not just be passed over. That's the point I'm trying to get across is get on the phone with them, talk with somebody, explain your situation, and who knows, maybe they can give you some worthwhile fees. Especially depending on your strategy. So this is all good stuff because it goes to show that this is why people out there follow my strategy and use my broker. No, there's no one size fits all broker either, and it really just depends. So now we can swing back to Chez's question. How has trading been going? I mean, in the email earlier you mentioned you've kind of switched some things up. So I guess what sort of things have you been? Because we know you've been doing well. One thing about Dim is he's always very transparent in the chat room, and that includes when he has rough days. Hey, I'm shutting it down. I've given back gains, or I've lost some money on the day. So it's not like he's one of these people that only posts winning trades or anything like that. So we know that you're doing well. But what sort of things have you kind of switched around that you were alluding to in that email you sent me?
Well, one thing was, when you have a very large account and you subtract a zero from it, suddenly it's not a very large account. Zeros matter. And it's had to change my my risk tolerance. Let's just throw huge numbers out there. So when you chop a zero from $1 million, think about it. Now you're dealing with what? $100,000, right?
That's a big difference.
That's a huge, huge difference. So even when you're going from 10,000, you chop a zero off of that, you're going to 1,000. So $10,000 you can account. You can enter a lot of different long positions. But when you're dealing with 1,000, now you have to pay attention to the price on your equities if you're playing equities, and even so with options. I mean, you're limited by what money you have to buy with. So I've had to adjust position sizes and my risk tolerance numbers. So some of the strategy and things that I'll pass over are things that once a while ago, it's actually, I want to say a long time ago now, I used to not even blink at and jump in. Now I'd have a plan, of course, but when you're sitting there and you're looking at 1,000 shares of something that's $100 per share, your risk breaks. It's still a percentage, and you're looking for the 4-to-1 or 5-to-1 ratio, and it's all that. But if you lose it, that loss is much larger than one if you're dealing with a $10 stock. You know what I mean?
Yeah, definitely. And I mean, it makes sense because you really bring up the fact that it really is percentages. But $1,000 or 1,000 shares of $100 stock versus 1,000 shares of a $20 stock. Don't get me wrong. the whole thing is you have to keep your stops realistic as well.
Right.
On a $100 stock, if you have a 5-cent stop loss, you are most likely getting stopped out, because 5 cents on $100 is quite a small percent. But 5 cents on, a $10 stock, a $5 stock, these might, in terms of percentages, are actually much wider. And that's why we always kind of harp on stuff, in terms of position sizing is one of your best risk management tools, and you should be kind of using it dynamically based on what you trade. But you also brought up something else I want to bring up, a $10,000 account versus a $1,000 account. When Shawn started with her $250 account, on a cash account for options, essentially, you can go through your account value just about once a day, and then it's back the next day, assuming you're just day trading. You can only take maybe one or maybe two positions on a $250 account because you've literally used all of your cash that day. Versus $1,000, maybe you can spread it over 4 or 5 trades. $10,000, you can probably go way more than you need to. But these are kind of good things you got to kind of remember too. But a lot of people just think, I have a $250 account, it's going to be awesome to day trade. And I'm like, well, maybe you get a trade or two in the day. And honestly, it's not always a bad thing. Maybe you need to only find 1 or 2 trades a day and take a look at it after it and see, what you missed, or should you have waited for a more optimal setup. Sometimes that kind of forcing you to be patient turns out to kind of be a real big asset.
Right.
Now, I guess my question here at this point is, what steps did you have to do in order to, realign your risk tolerance? Were you going super small positions and then working your way up? But how did you make the transition, of this all risk tolerance stuff? Because that's more than valid. It makes perfect sense. So what was the process that you kind of had to take yourself through in order to figure out, how you defined, okay, whoa, that's too much risk, or all right, yeah, I feel comfortable with that?
Well, currently I'm playing more of that Zen feeling, but when I first went back with, taking that zero and starting over again, it was right before I took that unfortunate long break due to medical reasons. But
which, by the way, we're very happy to have you back. And
definitely,
yes,
thank you. But It was a sitting there with the calculator and trying to come up with the numbers back to the way basics, saying, okay, I won't go beyond 1% of my account, and what does that actually come up to? And hardlining what I was willing to risk, and it was hard at first, very hard compared to when I was operating out of the huge account. It was a very much Zen and feeling, saying, that's just another pebble in the bucket. I can afford that. Whereas when you're missing 0 or 2 zeros or whatever it is off of your normal account size, it takes discipline, and you really need to have those hard numbers in your head to know what your limit is and what you're willing to do.
Now, how did you determine what your limit was? I understand you're sitting there with the calculator and you're, all right, what's 1% of my account? And you look at that number. Mm-hmm. Now, was that number that was staring back at you, did you know right off the bat it wasn't good because it just wasn't realistic, it was too small, or because just, I guess what I'm trying to get at is, just because you type in numbers on a calculator and it spits you back out a number, really you don't know how you feel about that number until that amount of, that number is on the market in the line. And then right. When the voices are, if there's no voices, okay, then obviously I feel comfortable with that number. So I guess, where did you end up with that number? Is it 1%, 2%? And how did you actually, did you have to just throw that number to the market and then saw how you feel? Or did you just know, mathematically, where kind of the gray areas were and where it was very black and white?
Well, I had come up to, I had said 1%, and I think in the beginning, I had worked it out to maybe 1 point something percent, closer to 2%. But basically, what had happened was I was trying to work with 1% on my normal watch list, and the watch list included a stock that I used to trade a lot, XLE.
VRX.
Oh no, VRX is cheap. XLE was an ETF thing that I traded a lot.
XLE, that was another one of your lovers.
Yeah, and it was in the $70 range, and there was no way I could really trade it effectively, at least in my previous strategies, effectively with the position size I like and the price. So I started saying, okay, position sizes, we're going to cut those down. And I still wasn't happy, because if my trades for the day, I didn't want to exceed X amount, on a single trade, 1%, great. But how much in a whole day am I going to invest or risk of the account? So I was like, I don't want to lose in a single day more than 5% of my account. So right there, I got 5 trades on based on a smaller position size on the XLE alone. I'm just throwing those out there. I don't know the exact numbers, but it was very limiting. So I quickly said, okay, we're going to have to start playing with some stocks that are under the $50 mark, and I can do more trades that way, or I can invest, I could do 2 entries on a single stock, on VRX, for instance, and treat them as separate trades, and I'm not, robbing from other possible trades in the day. Do you follow?
Yeah, and I mean, correct me if I'm wrong, but you're pretty much looking at what is the best return on your capital? Is that a good way to kind of sum that up?
Exactly.
And
yeah.
I mean, and that's while it is totally math, it also kind of comes down to, you had these names that like Clay said, that you love and that you've traded often, but if capital changes and things like that, you might be trading, subpar, because, not only it has nothing to do with how large your position is, but if you can't kind of scale in like you're used to, essentially you are getting out of your comfort zone because you know how to trade it one way, you know that it works well, but if things change and you have to start kind of changing stuff up, and maybe it's time to find a way to kind of go back to what you're used to, what you're comfortable with, but it might just have to be a lower price stock. So I mean, that's an absolutely great point too. But I mean, Clay, correct me if I'm wrong, doesn't it? It really just comes down to comfort. If you start having to force yourself, force a square peg through a round hole, most likely your trading is going to go poorly versus something that just feels natural and works for you.
Yeah, you took the slogan right out of my mouth. I was thinking this is the exact perfect example of a square peg, round hole. Let's just say the square peg is, account size. The account size has changed, so therefore this square hole has now gone to a circle hole. But if he's still trying to use his square peg strategy that he was using beforehand, things are just not going to work out. So basically what Dim had to do was get out his whittle. I think that's what they're called. You whittle wood.
Yes.
Is that right? So he had to get out his whittle and figure out, all right, my strategy is no longer a square hole. It's a round one. So I got to get my strategy now to also be a round one, so it can be round peg through round hole. So you got to keep that in mind as traders, is when things change, whether that's account size or heck, even position size. If you all of a sudden scale up too fast, we've heard that tell over and over again. There's many variables in trading that can change, that all of a sudden turn something from a square hole to a round hole, and then it can get nasty. But a lot of times you got to get out the dim whittle. That's what we're going to call it. You just got to dim whittle something and figure out...
we got the fourth dimension in the dim whittle.
Yeah, there we go. So now my question to you is, how long did this whittling take away before you kind of started to find your groove? Was this something that you got done relatively quickly, or did the whittling take... I guess, how long did the whittling process ultimately take you to before you found your comfort level?
Well, shortly after I returned. So what was that? Close to 4 months?
I was going to say, 3 months, but yeah, so I think we're in the same ballpark there.
Right. That's a long time, but to be honest, while I was out on medical leave, I hadn't been doing much other than listening to some of the trainings and podcasts and stuff. But as far as the platform, I opened it up on a weekly basis. So I got to, play a little. I didn't do a lot, but when I returned, in about 3 weeks, I had gone back to the very bare minimum small amount that I had figured out before the leave that I took, and then just started, feeling it out, seeing the success. The biggest frustration for me was just the sizes, and the limitation of it. Kudos to a lot of folks that start with next to nothing and build up, because it's infuriating how slow it is starting out, to me, because having a large amount of money to play with, you can, it's all zeros at the end. So your 10 gain may be 100 gain for me, or 1,000 gain, depending on the number of zeros we're playing with, and 10 was just a reality check. Very frustrating for me, having to put on the patience hat and keep the discipline. And some of the red days that I was encountering was just going against that discipline and taking off the patience hat. So, it's quick to remind you, saying, no, stick to the plan and be patient.
Do you ever get tempted to grab that vacation money house and be like, let's put that back in the trading account? Or is that just money? Is that just on lockdown in some offshore account that only your wife knows about?
No, it's on lockdown, but I could go through some steps to get it back, but that's not a consideration. We've been taking frequent trips down to the Gulf, looking at properties and whatnot. So it's a constant reminder, saying, I couldn't be doing this if that money wasn't there. So there's no way I'm going to touch it.
I was actually going to ask, is there any sort of like mind games? Because the way you describe it is, that would be, like you said, infuriating. That would be terrible to be like, oh, I remember when, and then, you had that zero, and, life was so much easier. So I can totally see the temptation being real on some days. Like, I just need to grab that money. But like you said, if you're headed down to the Gulf and, you're kind of reminding, what the point of all this is, I could see how that just makes things a little bit easier on you. So, are you still trading mainly stocks? Are you doing options? I guess what are the vehicles that you've been mainly focused on?
Well, in the beginning, figuring out those numbers and being limited, I did use both options and equities. My preference has always been equities, just always. Now I've gone through all the training for options, and I've used advanced, and I've used just plain straight trading options, buying a call, buying a put. But and it does give you access to the things that were out of reach. But there's so many stocks out there, so many equities, and so many different trades available to you. I don't see having to, again, force something that's out of my main strategy, my main, what I like to do, and I like to trade equities.
Zone.
Yeah, exactly.
And we've talked to a lot of other people before where it's, while they know how to trade kind of both vehicles, I mean, some people can trade multiple vehicles, Forex, futures, you name it. Ultimately, I know it sounds like I keep repeating myself, but the comfort level and just your familiarity with one versus the other. And, don't get me wrong, I think options are great, especially for folks, even with a large account, but mainly a small account because of the leverage it's kind of inherently built in. But there are factors you have to keep in mind. So if you have the equity to kind of trade an actual equity, to trade shares of a company, more power to you, because honestly, in reality, we're always just trading the chart. How you accomplish that is pretty much up to you, and most of the time it's determined by your account value. Because I promise you, if I had an even larger account and could trade, thousands of shares of Tesla or Google or something like that, then I would probably not trade options either. But I think and I feel like a broken record, but I really do feel like it just kind of comes down to what you're most comfortable with. And I do remember from your last podcast, that's really your bread and butter, is trading shares.
Yep.
And on that point, you think of T. Fletch, who we interviewed several episodes ago. But he's got a nice size account. Yet here he is trading options, using advanced options. So to just help beat that dead horse that Ches has been kicking this whole entire episode, personal comfort, whatever you feel most comfortable with, because you may have a huge account, but you may still choose to trade options in that account. So, and I realize that seems like a dead horse, but maybe you're not familiar with the world of, trading educators and this, that, and the other, but I assure you, you start digging and you're going to have people proclaiming they have the strategy. Do this and it'll all be good. No, because what happens if, quote unquote, this doesn't fit your personal comfort level? Then sure, maybe it does work for them, but that doesn't mean it's going to work for you. That's why you got to learn the general tools, which here we use charts and Dim uses some fundamental analysis. And then you got to do some whittling. You got to figure out what works best for you. Do you have any stocks right now that, we've had, XEL, VRX. I mean, what sort of stocks do you like to pay attention to nowadays? Or are you just kind of trading whatever pops up on the scanners? Or do you have ones that, do you have a basket of stocks?
Well, I have a small basket, and then I trade whatever comes up on the scanners. What's funny is I've been frustrated with you, Clay, from time to time because you're coming up with a watch list, and I'm like, damn it, they're the same damn stocks. So I have a feeling we're both checking a lot of the same scanners. And
same stocks that you've also found is what you're saying.
I thought he was saying that you only say the same positions day after day, but what he's saying is that you two come up with essentially the same watch list.
Right, yeah. Okay, there we go. Well, I don't know, Dim. I don't know what you want me to do. I'm sorry that I feel bad for you because that means you're in the same mindset as I am now, and I don't know. That's a scary spot to be in. But yeah, I mean, I guess this. What are you looking for on your scans in order to get on your watch list? What would you like to see?
Well, sometimes you'll post something that's just too low in price.
What's too low? And remember, listeners, this is not a holy grail. This is just what's too low for Dim, for his personal comfort level. So what's too low for you?
I'll shy away from anything that's coming out of or going into the penny stock range. So if it's at $1, forget it. I'm not gonna mess with it. There's one that you had recently alerted, and I love the setup and look of it, whatever, but there are others. I'm gonna move on, and it was $1.40 or $1.20 or somewhere in there, and it was moving downward. I was like, ooh, no thanks. There's a lot out there that are more stable, and I'm no thanks. I'll walk from those. But I'm looking at price and volume. That's if there's a volatility in there, especially in the beginning of the morning, some of these crazy or nuts or crazy is more not nuts but crazy alerts where it could probably whipsaw you. Some of those still really attract me simply because of the action that's in there, and liquidity is often huge in it.
I like what you said there, and that's a great point. It goes back to you being very self-aware and having a strategy. Is you could look at something and just not looking at the price, but look at that pattern. Yeah, that pattern looks great. Oh yeah, okay, I'm like it. And then all of a sudden he sees the price, and because of the price, as much as I like the chart, as much as I like the pattern, I'm no longer interested, and he moves on. And that's just that's what a system is. That's what's having a rules are as a part of a strategy is. Knowing what your limits are. And are we saying that that's the right way to go? No, maybe you can sit here and be like, I don't care if this thing is 10 cents, $10, $100, or $1,000. I will trade it if I like the chart pattern. For Dim, that's not the case. If he likes the chart pattern, but then he sees that it's a dollar stock, for example, he's just going to move on and find something else. So many ways up the profit hill, but that's a great example of somebody that's being self-aware and has rules within a strategy and isn't just making it up as they go. So what other sort of rules do you have? Is there any other kind of, red flags you're just like, I won't touch it? We know that price, you can't be coming out of $1 land. Do you have any sort of volume requirements, or how do you gauge, what's sufficient volume versus what's not enough volume?
Well, it's funny you say that. Volume, It depends on the stock. I know certain stocks, they don't trade at all during pre-market, so it's sort of hard to dictate based on pre-market activity whether the volume's there or not. So I'll rely on the previous days, what its average volume trading is, and I like to see in a day well over 1 million shares. But it's not hard fast, because I have gone in light with a small position on something that had great news, and they're just, now they're going nuts, and volume builds up. So their past behavior on a stock could be, they only traded 2,000 shares in a day on average for the past 3 months, but suddenly their patent was approved, and today they're doing over 2 million shares. So, I don't bar those out, but the current volume trade level also needs to be, it's play it as it comes to you sort of strategy. But what's going to make my watch list before the market opens is the average volume, or what pre-market's already trading in, and their current volume level. I don't like to see something that can't is likely to leave me with an open order and it won't fill for 300 shares, something like that. That's just not something I'm willing to play with.
And I mean, it really is just comes down to, obviously, the liquidity is kind of the technical, what you need to kind of work in and out of these trades. But more than that, I mean, what you're really looking for is sustained interest. Something happened, either it had a huge move, and you want to see people kind of flooding into it, whether they're buyers or sellers, doesn't matter to you. But it translates to, you can kind of work in and out of your positions. If you get into something and then the liquidity dries up, that stop loss might be much wider than you had originally anticipated, and it leads to a whole mess of problems. But obviously, you're looking for stuff that has the interest. You're going where the money is flowing in and out, and it just makes your life easier as a trader. You can keep your losses small and pretty much ride the winners for as much as they're willing to give you.
Right.
Actually, well, let's see. Yeah, we touched. I don't think you answered this, but maybe you did, which is why I'm stumbling over my words. Now, going back to the fourth dimension, you say you still use it, and you say you use that number that Schwab gives you. Are you using any other fundamental components that you factor into a trade, or is it just that number via Schwab? If you are, what other things are you looking at from a fundamental point of view?
Well, it's not just one number. They have...
Good. Now we have... Good. Now this should be a good talking point. I'm glad I asked.
So cash flow... I'm looking at their corporate or company information. That's basically, you're buying shares of a company. So to me, a fundamental says, okay, what kind of company is this? Is this a loser company, or is it a winner company, or are they just kind of treading water? And that tells me it's the same sort of trends or pattern things that people are looking for in movement on a chart. It's backup to what I'm seeing. Not basically, I'm not going to look at just fundamentals and trade solely on that. They have, like I said, cash value on a stock versus, their earnings, their cash flow, P&E. There's a number of numbers involved in there that give me they have 5 numbers here, 3 of them all have a negative behind them for year over year and months, and okay, so this is a losing company. Probably your best strategy is to either buy puts or short it, depending on whether it has stocks available to short. So did that answer the question?
It did. And my next follow-up question would be, so let's just do a pretend situation, and I put out a watch list in the morning, and you're looking at the tickers. Now, in order for the tickers to possibly translate from my watch list to yours, do you put them through a fundamental screener first, or because sometimes I'll put out my watch list with like 10 minutes until the market opens. So are you literally going through each ticker before it gets on your watch list with fundamental stuff, or how does that work from a time perspective? Because it sounds like this takes, not like all day, but it sounds like it's not something that happens within a few seconds, or maybe it does. But what is your process for a stock to actually arrive on the official, DIM watch list for the day?
Well, like I was saying earlier, your watch list has been, in a lot of ways, maybe one or two stocks are on there that I don't like or didn't pick up on, and I may have two additional ones that you didn't pick up on. But coming up with that watch list, it's my morning activity. What the biggest keying things are probably the same things you're looking for, and then on each one, when I type it into my platform, I've got a screen right over there called metrics, and those give me those negative or positive numbers that are a trend backup on what direction is probably the safe bet, in the very least, long term, for a week if I'm thinking about swinging. On a day trading perspective, I will bet against that depending on what today's trading is doing. So if they're suddenly very bullish on this day and you've got a nice bull pole position started, or not position but formation
pattern,
right, I will go long on that, but it tells me, okay, I better think about a little tighter stop loss in here or whatever, because we are playing against the overall trend, or the playing against what the overall company is has proven what it's going to do. And it's funny how often those fundamentals concur with the week or the monthly or whatever longer term charts say.
No, absolutely. So it sounds like, because Schwab is a good solid platform and you have everything figured out, is somebody could put an alert in the pit after the market is already opened, and you can look at that ticker, type it into Schwab, take a glance at your metric screen, and then you'll have an idea really quickly what's going on from a fundamental perspective. Is that a pretty fair assessment then?
Yes, and yeah, it took a little tweaking to say, okay, include these numbers, don't include these, and now it's just, it's a quick glance. Are they negatives? Are they positives? Are they kind of close to zeros? It gives me a story there, and then I can do a top-down analysis real quick with just the plain charts, and it's one of those, doing a top-down step. That's all.
And that's great. I like this because I'm honestly asking from a point of ignorance, because I don't do much fundamental analysis. So my own ignorance is showing through, where I'm picturing Dim like, okay, a ticker symbol pops up in the chat room, then he gets out like the Wall Street Journal. He's like, okay, what's the EPS, what's the cash flow, and then he's got to go to sec.org and start pulling up filings, and he's going through balance sheets. But I just learned something where, to your own self-admission, it took a little finagling to get what sort of numbers and stuff you want to get on your metric screen through Schwab, but you finagled enough to get to a point where it's almost like looking at a chart for you. We have chart vision here, but your fundamental vision sounds like you can recognize things very quickly and do those top-down analysis. So, that makes total sense on how this fundamental variable can exist within the world of high-speed trading, because it's not like it's taking you forever to look at, and figure out the fundamentals. So that makes good sense. So what are some things now that, as we sit right now, do you feel like you're struggling with anything right now? Do you kind of, being very self-aware, are you kind of aware of something where it's like, I should probably keep on working at that? Or are you feeling pretty good about your trading? Where are you at kind of mentally right now in terms of how your trading's going, with the newer account size?
I'd say I'm still a little frustrated, but it's there's a light at the end of the tunnel. I can see it for sure, but I had a couple red days last week, and that's just because the frustration creeps in, and you break rules. Yeah, well, what happens when you break rules? You got to suffer the consequences. So. But I, just as you said very early in this podcast, I will shut down the platform and just walk away. Tomorrow's another day. So.
I think a lot of people struggle with that too. And I mean, Clay, I think you actually put a video out there about pretty much how just the way that society is. You feel like you have to be at the desk making trades, plinking away all day. And in reality, in this kind of job and in this industry, sitting on your hands and waiting, or if you're just not in tune with the market, you are better off doing exactly like Dim does and shutting the platform down and coming back tomorrow. Because I promise you, just for context, I had 2 losers on Friday, and it's frustrating, and it's the end of the week and whatever. That's part of the frustration of trading. And then today, I had 1 trade that fully paid for both those losers and then some, and then I'm just like, So, all that little upset that I got on Friday, it's for absolutely no reason, because on Monday there's going to be more opportunities, and Tuesdays there'll be opportunities, some days there'll be no opportunities, but I mean, that's really our job, is to pretty much stay in tune and spot where we see kind of an advantage, put the odds in our favor. So I think it's very, very big of you to kind of say, there are times when I just walk away from the computer. By no means are you going to sit there and say, I need to force a $250 a day, $500 a day, $1,000 a day, whatever it is, because sometimes it's just not there. The action just isn't there for you. Maybe you're mentally just not there. It comes back down to the square peg, round hole. Sometimes it's just, not going to work out for you. But is it safe to say, though, your account is trending up? I know you said you're frustrated sometimes, but overall, is your account heading in the upward direction, or are you kind of break even, or what? Because from what I see in the chat room, it looks like you're doing pretty well.
Yeah, it's on an overall upward trend, and it's funny. I recognize it from early on trading that it will. It's funny. The graph is gradual right now, and it will take a swing upward. As I move more into my finding that past groove that I had before, having more engine work behind me, you know what I mean? More oomph to the account. I could add more zeros to it, and just the growth is exponential as you grow your account. So anybody starting with a small one, don't lose hope. It has a very slow, gradual growth line, but the separation from the bottom to the top gets bigger and bigger, exponentially over time, and that's my reminder to myself too. Just saying, don't lose hope. But yeah, it's on an upward trend, just not as sharp as I think anybody would like, but it's on an upward trend.
Higher highs and higher lows, trending up.
That's right.
Yeah, nobody ever said that higher highs and higher lows would happen at an extremely fast rate, and I think that's what I think that happens to a lot of people. They're actually doing well, but then the voices show up, which again, to give Dim full credit, he's very self-aware. He understands that, I'm frustrated, but still, it could be worse. But a lot of people, they're doing well, but the voices show up, and they don't quite understand what the voices are trying to do. And because it's not happening fast enough, and all of a sudden they get off the path and start breaking rules in the spirit of making it happen faster, and then all that happens is it goes faster, but in the wrong direction, and your account shrinks and shrinks. So I think that's a great point on your part, where nothing here is fast, and when you don't have the quote unquote engine, things take a little bit while, but you're constructing the engine right now. I mean, slowly but surely, one bolt at a time, one nut at a time, and it's just a matter of letting your strategy do its thing. So looking up at the time here, probably should be wrapping things up. I mean, did you have anything else you wanted to touch on, or I don't want to just cut you off.
Yeah.
Okay, great.
I do. So, a reminder back to the old 80 or so. Is that right? 80? 80 podcasts ago?
You're on 59 was your episode.
Wow. Okay. So back
then... Time flies, huh?
Yeah. I had mentioned that this was my newest career, and it still is. So I know there's only a handful, if that, of folks in your chat room that make a living off of trading. And me being one of those, that's the other thing that's slowed growth down is, I'm actually pulling money out to my checking account every so often, based on my budget, and that slows down the forward progress a little. But something you'd said, and you've said in the chat room quite often, is actually counter to what I do, and I guess it's depending on individuals what motivates them and what actually is behind in their psyche. And you warn a lot of people not to set a quota for themselves in a day, or not to keep a reminder of there's a certain amount of money you need to make. And I'm actually quite the opposite. I know there's a figure in my head what I need to make on average per day to know that I'm being successful and that I can support myself. Otherwise, I'm going to have to dip into my long-term retirement funds. So that's an indicator to me saying whether this trading business is worth it or not, and whether I'm being successful or not and making a living off of it. Just something I wanted to throw out there.
So do you ever find yourself forcing trades because of that, though? Because you need to get to some amount?
I have found myself forcing trades, but it's not because of that. It's because I haven't had a trade, or because I feel I'm sitting here, I should be doing something, right? So when those voices start hitting me and I force a trade or two, I recognize what I just did, and that's the point where I'll shut down